we got news that Zone was launching a POS that is powered by the blockchain. And I'll tell you my first reaction to it. What was this again? That was my first reaction, right? We have a lot of POS providers, service providers in Nigeria. And hearing that one is being launched set up a few bells in my head. And so we are going to be looking at all of that. So my first question is, given that POS terminals are largely reliable in Nigeria, what benefit does a blockchain powered or decentralized POS payment gateway, what benefit does it bring to the ecosystem?
It's interesting. So you've touched on two things. You've touched on POS devices. You've touched on blockchain. And I think I'm just going to disintermediate and start with blockchain technology. Our vision as a company, as a technology company, is to leverage blockchain technology to more or less build a future state of decentralized financial ecosystem that provides significant benefits to individuals, to businesses, and the institutions that deliver financial services to them. That's essentially what Zone does. We commenced on this journey for a while now. We're happy to say we have been the first regulated blockchain company by the Central Bank of Nigeria, and that we obtained a license from the Central Bank of Nigeria about 2 years ago in 2022, and we have been leveraging our technology to see how we can provide better efficiency to processing payments in fiat currencies for traditional financial service providers. Now, when I mentioned that, I know that's going to sound a bit strange. When you hear blockchain technology, you're able to relate that with other forms of digital assets ranging from crypto, to stable coins and the likes. So what we've done is more or less we've learned a lot on our journey. I can bid my chest and say we are the first to explore seeing how we can provide better efficiency to facilitate the movement of value between individuals and businesses, and between businesses and individuals with the blockchain. So that's that as far as technology goes. And we'll begin to speak about another vertical, which is payments. Now, interestingly, you had mentioned that for POS, the POS payments are very reliable, and I agree with you. But they haven't always been this way, and a lot especially for the players, for the service providers, and the very popular names, are having to do a whole lot of work behind the scenes. That costs a lot as well to be able to deliver the services in the way we enjoy them as individuals and businesses that accept payments with POS technology. So what we have done essentially is to say, okay, how do we, looking at the payment value chain and the way it is set up, how do we ensure that we can develop and provide an infrastructure layer that sort of abstracts some of the complexities associated with processing POS transactions, primarily to financial service providers, and just allow them to carry out their primary objectives of delivering excellent customer experience and acquiring customers that can enjoy and benefit from this. And that is what we have done. So when you consider the payment value chain, you sort of have frontline providers or aggregators that provide POS devices to merchants, and this could either be a fintech or it could be a bank. But behind all of this, you need to ensure that when a cardholder or an individual decides that they want to make payment through any method via a POS device, that payment the funds can move from the payer's account to the business's account, and that process can be facilitated as seamlessly as possible. Now, I'd mentioned that a whole lot is happening behind the scenes to ensure that this can happen. We had instances where some entities are saying, hey, how can they probably establish some direct connections in some instances to facilitate this payments and all of that. Traditionally speaking, we know that cash flow can be a problem for businesses. And typically the way the industry is structured, when a business decides to accept payment from you as an individual who has come into their store, what typically happens, and considering how the traditional settlement system is structured today, that business will typically not get value for that particular transaction that they have consummated with you in real time. They will need to wait for, in some cases, for 24 hours before they can get that. That's on the one hand. In certain other instances, you could say that there are reliability issues as well associated with processing this particular POS transactions, and these would require the providers to establish multiple connections to different banks or to different switching companies to see how they can improve upon this reliability. And then last but not the least, you have dispute related issues, dispute and chargeback issues. So what we have done is, as an entity, first of all, we are strictly a B2B payment infrastructure company leveraging blockchain technology. We do not acquire merchants. We do not serve businesses, but we instead provide our services to the financial service providers that are doing this to them. And to say, we have a lot of entities today that are operating in the POS space, like you've rightly mentioned, that provide these POS devices. What we will do is to operate on the infrastructure layer and, sort of absolve them of some of the challenges that they experience today in delivering quality experience to their businesses and to the customers of those businesses. And that's what we have done. That's our focus, that's our niche, and that is what we are doing today. Some of the benefits we deliver and what we guarantee to our customers is to say, you will be able to, for the financial service providers, you'll be able to directly connect with different issuing institutions. Now, what do I mean by issuing institutions? These are institutions that essentially hold the balances for the customers that come to make payments to you. So we'll be able to grant you that direct access that allows you to carry out that payment that significantly enhances reliability via a single point of connection. So rather than having multiple connections to these different institutions, we provide you a single setup that allows you to essentially talk to multiple institutions, building significant redundancy because it's a decentralized network, essentially, and that's how it operates. So you have that. And then we have also, because we are able to provide real-time access to records for these payment transactions, we're able to also facilitate faster settlements to the financial service providers. So these financial service providers, what they do is they give value to the businesses, the merchants or the agents or their books. They give them value in advance for when they get value from the institution of the cardholder or the payer. That's what's happening. So to be able to facilitate this, it means you're going to have a lot of capital locked in for that purpose. You can't deploy that to any other uses, and so it's actually a very expensive business to run. We have significantly shortened that turnaround time in such a way that we're able to provide settlement to these financial service providers with a quicker turnaround time, and this frees up capital that they can deploy to other activities, to other aspects of their operations, or even expansion, if you like that. And then we can say that we have gone a long way to eliminating the dispute problem as well. We've been able to provide an intelligent system that provides visibility to both the bank or the institution, the financial service provider for the payer, as well as the financial service provider for the merchant that's accepted that payment. And with that, we have provided better visibility, and we're able to automate the refund for transactions that would have typically crystallized into dispute. So this is the niche. This is how we view ourselves. This is our focus. This is the efficiency we are provided, and this is why we believe we would be able to take on the market and win.
Okay, thank you for that, Francis. So you briefly touched on chargeback, which is something I'm particularly interested in. We've seen a lot of fraud incidents in the last 2 years, both for fintechs and for banks. And one of your key propositions is eliminating chargeback fraud. And why I'm particularly interested in that is the vast majority of chargeback fraud is it's driven by humans, right? It's not really a technology problem. So how does Zone propose to either reduce incidents of this or completely eliminate it?
Okay, yeah. So I think when you And if you have a good understanding of what causes this chargeback frauds or friendly fraud, if you would like to call it that, um, it all stems from what you would call a lack of transparency in the way the traditional payment architecture is set up today in the industry. That's different from Zone. Um, Now, for most payments that have happened, you have service providers, intermediaries, and this could be the switching company, or it could be the financial service provider that has deployed a POS terminal, or the financial service provider could be a bank or a fintech that has provided a card or any other form of payment to an individual. We sort of operate in a hub and spoke, or the industry traditionally has operated in a hub and spoke architecture, and this doesn't necessarily grant visibility or transparency in what is happening for a particular payment transaction that has been initiated across these different entities. So, take for instance, when a payment is initiated on the POS device, it goes to a centralized hub, which in turn is terminated to the institution that has issued maybe a card or if it's an account for that particular transaction. Now, the entity that has deployed the POS device can only say what has happened on its POS device, as well as the entity that's in the middle and establishing this connection between the other two parties can only see what is happening in its own system per time. And then the entity that has also issued that card or that other method of payment can only see what's happening in its system. By utilizing blockchain technology and guaranteeing that we can have replicated records across these different entities, first of all, we provide transparency to what's happening for these transactions. But we don't just stop there. Seeing as you have blockchain technology on one hand, and you have traditional EMV payment systems on the other hand, we have also been able to bridge this gap by deploying a smart technology on the POS devices that is also able to tell us not just what's happening on the transaction processing layer, but also what's happening on the POS devices when the transaction is being initiated or when it's receiving a response. So that way, we're able to archive the records for every transaction that's happened on the blockchain. And when we do that, so say a bad faith actor goes to their bank to raise a friendly fraud, a claim to say they didn't get value for a transaction that was successful. Because we've been able to gain knowledge of what has happened in that transaction by providing visibility across the value chain, we're able to auto decline this particular transaction event. And so typically when you would have acquiring institutions parting away with huge sums in chargeback fraud running from millions to even billions in some instances, we've been able to bridge that gap by providing this service that sort of initiates an auto decline for these fraudulent events, saving our clients significant value. And that's how we've been able to solve for this.
To listen to the full episode of this podcast, visit podcast.techpoint.africa or search for Techpoint Africa Podcast on your favorite podcast platforms.